Hello, everyone, and welcome to Edison TV. My name is Victoria Chernik. I'm an investment director at Edison Group. Our guest today is Dr. Daniel Koller, who is the head of the investment team at BB Biotech, an investment company listed on 3 stock exchanges in Switzerland, Germany, and Italy, with a market cap of over 3 billion Swiss francs. Daniel, welcome.
Hello, Victoria. Thanks for having me.
Well, let's start from the markets. The markets seems to have picked up this year. The biotech sector is also returning to growth. Do you believe the sector will outperform the broader equity markets this 2023? And if so, what catalysts would be? More macro or industry-specific factors, you believe?
Yes, obviously a very important question as well for us as investors in the biotech market. Let me start off by just a quick review of 2022, where, as everybody knows, the market has been difficult because, as I said, of obviously inflation-driven steep interest rate hikes. And we still see actually the macro picture, at least in the early inning of the year, still, I would call it winning, in a sense that European markets behave quite positive in the first couple of weeks, whereas, for example, biotech is flat for the year. And I think that's still with one or the other smaller uncertainty around how far will central banks go. So the US Fed will go north of the 5%, and how far the European central banks, what is on the table. So I think from a macro perspective, certain growth sectors or growth themes, as well as the topic between what is larger cap, diversified, profitable, versus, for example, mid cap or smaller cap, at least in our universe, has continued to spill over actually in the first couple of weeks of January. What keeps us very optimistic is, I said, if the macro generalistic pressure abates, and we are convinced that's going to happen sooner than later, the fundamentals underneath are actually very strong. So we have seen substantial progress over the last 12, 18 months, year to date. Once again, a lot of positive headlines that have not been reflected in markets. So I think short term, still some macro question marks, but over the year, summer, fall, I think fundamentals will pick up in a sense that they start to influence and impact actually share price that are very attractive, we think substantially undervalued, and from that perspective, we remain quite optimistic for a positive 2023 for the biotech sector as well.
I see, Daniel. So that leads me to the next question nicely. What's the outlook for the remainder of the year for the biotech sector, do you see? What are the major themes emerging, perhaps different to the previous periods? Do you see a pickup in the deals activity, because M&As slowed down significantly last year? And what risks lie ahead for the sector?
I think let's start on the fundamental, almost individual level for companies, and that still we see a flurry, or actually a very large number of important milestones, being a clinical trial readouts that will translate all the way to product approvals. What you describe, or what you question, is as well about transaction in the market, being it M&A or business development. And I think we've seen a very slow activity over the last 1 and 2 years in terms of M&A, and we hear quite actually outspoken management teams from large pharma and large biotech. So we assume in the next coming quarters actually M&A activity to pick up. Business development licensing has been active the last 1 or 2 years and has become more of a source of so-called non-dilutive investments or capital injection into growth companies that still invest in their pipeline. So that's the other thing that we assume, given that some of these smaller companies are at such low valuations, they actually prefer, for example, to do a business development deal instead of, for example, issuing equity. So we remain on M&A and both in business development actually very optimistic, and we think there will be a reacceleration, kind of like back to the normal cycle we've seen over the last many years. And risks, I think from a fundamental stance, I said the macro let's say, capital market topic we have discussed quickly, for example, interest rate. One thing we want to see is how the IRA, the first step of the IRA, the Inflation Reduction Act, and potential price controls in the US, the most important pharmaceutical market, will play out. By September, CMS is expected to release the first list of product candidates that could be on this list. We think it's mostly all the products from the pharmaceutical sector and biotech, which shall be excluded pretty much for the years to come. But that's something I think I said that Wall Street and specialists are carefully monitoring what's to come. But as well there, we think the risk is understood and we see it as limited. And from that perspective, the fundamentals we think will clearly win.
Yes, I see. So let's touch on valuations. Valuations of listed biotech companies come down significantly. We've seen them, they've been coming down over the past 2 years quite a lot, whereas private companies' valuations haven't really gone down that much. So do you see this within this discrepancy? Is it a good time to invest in a portfolio of quality listed biotech stocks?
Yeah, we think there is clearly a lot of upside potential. I can almost call it catch-up potential, given the said that we have seen sometimes very steep devaluation or so-called sell-offs that often have been, we think at least, not triggered by quality or by issues at the company, but purely in a sense like from a macro perspective or macro level that I've described before. So we see there actually quite substantial rebound or upside opportunity in smaller caps to the most, but to be fair as well, they're higher risks per se, and that's why I said we even ourselves obviously run a portfolio strategy in the smaller to mid cap, meaning smaller per se position in more distributed or in numerical more companies. But I said valuation very attractive, and I think that's a small challenge for investor because the biotech sector is very heterogeneous. So we have large cap, just look at our portfolio, large cap companies like a Vertex trading at 20 times price earnings, absolute high quality, high growth rate, all the way to profitable mid caps that sometimes trade between 20 and 30 times, that double and triple their earnings potential over the next 2-3 years. So I think a very attractive growth opportunity. And then the continued, I would say, capital required companies that are still investing in pipeline that burn through cash, there we deploy discounted cash flow models, and there we see the biggest discrepancy in the public sector between what we have as our assumption and where we see trading. And what do we do in the portfolio? I said we selectively will look at new ideas. These will be in the small to mid cap, mostly in the public. We as well selectively can invest into the private sector, as we have done, for example, in the second half of 2022, when we have done an investment in Rivus Pharmaceuticals, a private company that develops, I think, a very attractive asset for the obesity market, which is obviously one of the, I would say, the hot areas in the therapeutic fields, given the sheer size of obviously the opportunity as such. So private we'll look at, we don't have a specific now strategy to say we avoid one or the other. We see clear opportunities on the public side, and that is our core strategy, and that's what we already have. Nowadays, too, from a cash perspective, to obviously consider the cash payout we have for our dividend payment in March. And as soon as that is through, we'll reconsider in terms of further allocation into small mid-cap public side, as well as one or the other, or existing portfolio, as well as the other, one or the other, a new investment opportunity we clearly see out there.
I understand, yeah, about your positioning. So the key features really differentiating you within the sector are that you focus on listed small to mid cap companies with a bit of a large caps there, and also you pay a dividend. Is that fair to say that?
Yes, I think that's pretty much in a nutshell what BB Biotech is positioned and has been positioned over the last many years. The reason why we do so is because there we see, I said, an ideal growth and return opportunity versus the risk. And that's what we see as well, for example, as our strength in terms of supporting companies on their journey with obviously capital increases and capital allocation towards these companies to make sure these companies can invest into the next technology and next actually pipeline candidates that will ultimately drive value for the healthcare system, for the patient. And we obviously as well want to see that for us as investors.
Okay, so we'll keep an eye on the sector during this year as it returns to growth. We've had a guest today from BB Biotech, the head of investment team there, Dr. Daniel Koller. Thank you, Daniel, for coming in.
Thank you again for having me.